Crocs have been worn for countless years and have become something of a polarizing icon. But did you know they were on the verge of disappearing? At a crucial time in its existence, the company had to take very dangerous risks to ensure its survival. Welcome back to Corporate Catalysts, where we take a closer look at the world's most captivating brands, businesses, and icons. Today, we explore Crocs, the company that inspires mixed opinions. Some hate it, others love it. The origins of the Crocs company date back a little earlier than originally presented, as it is based on the company Fin project, founded in 1965 by the Italian Euro Vecchiola, who started a company with two other partners. Initially, the company was dedicated to supplying footwear to the entire industry, focusing mainly on the development of materials that always sought to provide better comfort and performance for shoes. In the 1990s, Fin Project expanded its reach by establishing a subsidiary in Canada called Found Creation, with which they developed several key components that would later be used to create Crocs. They were able to create the Croslite component, a special resin with certain properties that allowed it to be molded internally to make it much more flexible, water-resistant, and comfortable for long periods of use. This was developed in 1996 to be exact. This material was very interesting because it had the ability to adapt to the shape of each person's foot due to its closed-cell nature, which softens with body heat. The creation of Croslite laid the groundwork for the development of Crocs footwear, making it possible to create versatile footwear that was not only suitable for sailors, but also offered comfort and performance benefits for a wide range of activities and lifestyles. This all culminated at the turn of the 21st century with the launch of Crocs Inc. Crocs was founded in 2002 by Scott Siemens, Lyndon Duke Hansen, and George Bodecker. Jr. Scott Siemens had been working for the company Foam for some time, assembling the very shoes invented by Andrew Reddyhoff. The thing is that at some point he realized how practical these shoes were and decided to tell his friends about them. There were two people who would join him as partners to create their own company. The logo was decided, as was their intention too. The flexibility of the material allowed it to adapt to the user's foot, and it also didn't slip as easily in the water. They had found the balance point and chose the name of a large and impressive animal in both ecosystems, the crocodile. The launch of the first model of Crocs, the Beach, at the Fort Lauderdale Boat Show in 2002 marked the official debut of the brand on the market, with a rapid sale of almost 200 pairs immediately, marking one of its most important pillars. The brand was well received by people who worked long hours standing and was also appreciated by sailors themselves. They also had some niche markets, such as gardeners. It was a good time to start their great expansion. Crocs' growth happened during the years 2004 to 2007. It was their moment to become a little more famous than usual. During this period, they decided to acquire Found Creation, the company that created this material. It was necessary, and they had their reasons for doing so, since with this they obtained direct control over the essential raw material of their products, the Croslite resin, as well as over the provincial design of their shoes. In this way, they would be their own distributors and owners of the design and wouldn't have to pay royalties to anyone. At the same time, the signing of a license with Disney in the same year resulted in a strategic partnership. This deal with one of the most recognized entertainment companies in the world allowed Crocs to expand its reach and consumer base. Now that Crocs had entered the children's market and become a fashion trend in their own right, everyone was wearing their boots. It was common worldwide, and they had to open more and more stores in different areas and parts of the world to meet the demand, from creating factories in China to Mexico. These new facilities not only expanded the company's manufacturing capacity, but also provided access to local labor and resources, optimizing production costs and improving operational efficiency. In 2006, Crocs officially completed its initial public offering, trading on the NASDAQ stock market under the symbol CROX, a decision that ironically gave the company the ability to continue its expansion and continue to invest in key areas such as research and development, marketing, and global expansion. The IPO also increased Crocs' visibility and credibility in the financial markets, allowing the company to access more growth and financing opportunities in the future. This period of growth and expansion culminated in 2007 when Crocs reached $200 million in sales, a major accomplishment for the company and a very important point in the footwear industry and its strong position as a leading brand in the industry. In the years that followed, from 2008 to 2013, Crocs experienced significant setbacks that led to a crisis and subsequent restructuring of the company. This began in 2008, coinciding with the onset of the global economic crisis. Crocs' sales began to plummet. The company was stunned by this sudden drop in demand and considered several possible reasons, including competitors copying their designs or the durability of their products, which did not require frequent replacement. To address this decline in sales, Crocs decided to diversify its footwear designs and create new styles to regain the public's attention. This new strategy initially resulted in a sales rebound, but by 2011, demand had dropped again. At this point, the company realized that it was relying too heavily on trends to generate profits, and that this reliance was unsustainable in the long run. It was discovered that Crocs' cost structure was too high, as the company required significant infrastructure to meet demand when its products were in style. But that demand quickly declined when fashions changed. In addition, Crocs had over-associated its brand with its flagship product, shoes, making it difficult to diversify into other products and accessories that the company offered. As a result of these difficulties, Crocs was forced to implement a new restructuring plan in 2013. This time, the company changed its brand profile and implemented cost-cutting measures such as factory closures and job cuts. Crocs implemented changes to its business model to adapt to market demands and ensure its long-term sustainability. The company began to reorganize around a comprehensive strategy that included cost reductions and a shift to areas with greater growth potential. One of the key actions Crocs took was to phase out its physical stores and outsource its manufacturing. This decision allowed the company to reduce costs and focus its resources on e-commerce as an increasingly important sales channel. Crocs also partnered with designers and celebrities to increase its visibility and appeal. These partnerships resulted in the release of specialty styles and premium lines that captured consumer attention and reinforced the brand's image as innovative and relevant in the fashion world. In 2018, Crocs further streamlined its business by closing its remaining factories and focusing on direct sales. This was already inevitable in order to cut costs. By achieving operational efficiency and maximizing revenue, the company was able to make better financial moves. The health crisis caused by the H1N1 pandemic gave a big boost to Crocs' sound business strategy. This led to a shift in consumer preferences, with increased demand for comfortable and functional footwear, which benefited Crocs due to its reputation for comfort and versatility. In 2022, Crocs achieved a significant 60% increase in sales, demonstrating the company's ability to capitalize on market trends and meet consumer demand. The company's goal is to reach $5 billion in sales by 2026, which would be a significant milestone in its growth trajectory. It is important to note that while Crocs does not have a direct presence in certain markets, such as Argentina, where it operates through licensees such as Distrenando, the brand has managed to maintain its influence and global presence. In some countries, locally inspired products have been developed based on the classic Crocs design, such as clogs, which represent an important part of sales and have withstood the challenges of the company's restructuring plans. In the end, a smart decision ultimately saved the company. Crocs thought ahead and were able to adapt quickly during periods of adversity, transforming their business model to adapt to the changing market and trends. This has allowed Crocs to continue to be a dominant player in the fashion industry and remain poised for future growth.